I can't remember when we last had an entirely as expected policy, no surprises policy. 50 basis point hike. The important point is, in spite of 50 basis, there was no hell breaking loose because this, rupee turmoil and the Fed's extraordinary hawkishness had kind of prepared us that the Reserve Bank will have to go at least part of the way. It can't manage with a 35 basis hike. So that's why the markets were not rattled. On the contrary, stocks went up through the roof because it looked like the Reserve Bank is not doing anything shocking. The rupee actually strengthened, the dollar became cheaper by 50 pies, but that was for other reasons as well. Bonds were flat because that is entirely on expected lines. What will the Reserve Bank do hereafter? The governor gave absolutely no guidance. I'll come to that in just a minute. He said he won't give a guidance because of the uncertainty. But what he did say was that growth will be a little slower. Instead of 7.2, he was expecting a 7% growth. And that is maybe a little optimistic because when the world slows down, India could also slow down in the later quarters. We may get a 6 point something kind of GDP in the current year. Inflation, again, he has retained the forecast at 6.7, could be optimistic because, on the street, there is a lot of fear about food inflation, vegetable inflation because of the delayed withdrawal of monsoon. So probably it is still going to remain 6% even after March or even up to March. RBI steps henceforth. More or less the majority in the street are expecting a further 35 basis hike in December and another 25 in February. So the repo rate finally will be 6.5%. So today's 0.5% and plus another 60 basis point hike is expected. This perhaps is inevitable because, globally also rates are going up. What does it mean for you and me? For you and me, it means that, home loan rates will immediately go up by 0.5%, so EMIs are rising. But more importantly, it is going to go on rising. Let us have no doubt about that up until February, our loan rates are going to rise. But there is a positive. Our deposit rates will definitely rise. Already they're rising, and hereafter, if you're having an FD, just hold on. In 6 months, you are going to get a much better rate if you're going to lock yourself into a 1 year or a 3 year FD. For a bank investor, shareholder, just remember, until now we thought, when rates go up, lending rates will go up. But deposit rates won't go up, so bank stocks will be advantaged. That advantage is coming to an end. Now margins will be flat because deposit rates, cost of money for the bank also is going up. So the rah-rah days of bank stocks rising perhaps is over.